Candlestick analysis allows for the differentiation of price moves in a particular market trend. For example, last summer, all summer long, the markets were down one day, up the next day, down, up, down. You couldn't trade one way or the other, down to even specific sectors not being able to move very much over a 1 or 2 day period. The sideways mode of the current market is much different. Investor sentiment has now come back into the market with much more enthusiasm, making any sector move stronger to the bullish side or the bearish side. But the results is there are some bullish sectors and there are some bearish sectors which are offsetting the general market. But candlestick analysis easily identifies which sectors are moving the strongest. For example, we could identify how the gold stocks, and this is Nugget, the 3 leveraged ETF, setting up as a scoop pattern. We know what to expect coming out of a scoop pattern, a very strong price move. Even today, they gapped up through the handle of the scoop pattern and through the 50-day moving average, which produces a high probability there's going to be more upside. That's how human nature works. As we can see in the FCB, when it came out of the scoop pattern, it had a very strong slingshot effect to the upside. How long do you continue to hold this one? Until you see a sell signal and a close below the T line. So not only can candlestick analysis identify the patterns that are setting up, but it also allows you to analyze how long you hold those positions. Our recent recommendation on advanced micro devices, AMD, was based upon this little scoop pattern setup that was a wave 1, wave 2, ready to slingshot out into wave 3. So when you can identify the pattern and you can identify the signals that are creating the pattern, such as there's our doji followed by a gap up, our best friend signal, that's a very strong bullish signal, which also was completing the scoop pattern, putting us into a very high probability trade. Candlestick analysis is nothing more than analyzing what happens in human nature and how price movements occur based upon human nature over the past 400 years of trading. Knowing what pattern setups provide high probability trades allows a candlestick investor to be in the right place at the right time. We can see a wave 1. We can see a pullback on a wave 2, J-hook pattern, fry pan bottom. And how did this next pattern get started, or next wave of this pattern get started? With what we call a doji sandwich, a bullish day, a doji, followed by another bullish day with a doji sandwiched in between. We know what the results are of a bullish sandwich. More upside. We know what the breakout results are of a fry pan bottom. More upside. This basically visually puts the probabilities greatly in your favor by identifying the signals and the patterns combined. That'll be it. We'll see you in the chat rooms.